welcome. You're watching The Big Question. I'm Tamanna Inamdar. Being a full-time investor in the stock market as a career choice is something that has picked up in the post-COVID era and is growing from strength to strength. It's a trend, in fact, which has grown stronger even as market returns have improved. More and more young people in general are investing in the Indian equity market, which has witnessed a significant demographic shift post-COVID. Nearly 50% of new demat account holders, for example, are under the age of 30. This is as per the NSE investor data, which says investors under 30 now account for 40% of the total investor base, which was just about 22.9% before the pandemic. In fact, as per a recent survey, 45% of young Indians see stocks as their preferred mode of investment. And now that stock markets are in a slump, the question is about what next. Now, in recent days, there's also been conversation about what the next generation of entrepreneurs is doing, big family businesses, where the next generation is looking more and more at managing their family offices and investments more than anything else. In that sense, making money off money has become the goal. Right now, it's a painful decision that has been made because of what is happening in the markets. Over 450 of Nifty 500 stocks have declined in February. In fact, Nifty has recorded its longest monthly losing streak in 28 years. The index is on its longest losing streak, like I mentioned, since November 1996. Now, in this backdrop, the big question we're asking is, how do you continue to be a careerist in equity investments at a time like this? Is a career in equity investment still a viable option? If you want to continue, what is the kind of mindset that you have to bring to the table? Is it time to maybe dust off your old degrees and go look for a regular job? Or is this something that you can continue to do as a career? To speak on this aspect, I'm joined by Ajay Bagga, market veteran, with us today. I'm also speaking with Nitin Dharmawat. He's CFA and co-founder of Aurum Capital. Niharika Sondhi, founder and director of EdNet Consultants, is with us on the show, and I'm going to be talking to her about career choices. And Dr. Anjali Chhabria, director at Mind Temple, who's a psychiatrist, will be talking to us about the mindset required to stay through, to hold through tough times. So with that context, let me begin the conversation with Mr. Ajay Bagga. Ajay, great to have you on the show as always. And I thought this is an important topic because whether you get this information through stories around you, it is very clear that more and more people have chosen full-time equity investing. They could be graphic designers who've now become full-time investors. It could be people with professions or jobs or even businesses who've decided that they have better returns in equity investing. They are having a hard reality check right now, isn't it?
Yeah, I think, and it will get worse. So I have seen it 4 times, Tamanna, in the last 34, 35 years. The first time was during 1991, during Harshad Mehta time. The second time was the dot-com from 97 to 2000. Then again from 2005 to 7, we saw this. And now finally, this has been a big surge over the last 4 years post-COVID. There has been very easy access, very nearly zero brokerage kind of online accounts with which you can trade. And there has been a gamification of investments. It's become a video game without realizing the ramifications and the consequences. When the market went up, everybody thought it was their own skill set which was contributing to it. And now when we have had a mild correction, people are realizing that they aren't so skillful. So it's nothing new. It happens in every time the markets go up fast and furious. This kind of misjudgment of risk and misjudgment of inherent skill sets happens. People take money out of businesses and start investing. Mr. Uday Kotak spoke about family offices getting into fund management rather than incubating new companies. And we have a cohort of youngsters who are trying trading for a living. Yeah. The SEBI data is telling you 99% are losing money. And that is the trend. That will stay the trend. It's not very easy making money as a trader.
No, so then let me come back to the core question, Mr. Bagga. And of course, the SEBI data you're talking about is pertaining to F&O trading, which a lot of people are doing. They're doing all kinds of trading, actually. So is this a bad career choice? I'm also approaching this from an option as a career. Or is this something that where you can build a 25, 30-year long career?
On your own, very difficult. As an institution, you join an institution, you start as a research analyst, build up to be a fund manager, then branch off, start your own alternative investment fund, or you are a family office, you hire people who are trained in this. It's an excellent career choice. But it's the peak of the peak who get into it. It's the 1% of the 1% are good at it. The rest are better off giving their money to a professional fund manager rather than trying it out themselves.
Nitin Dharmavat, what do you think of this? Because a lot of people watching may have moved to full-time investing as a career option and said, why should I go and listen to some boss 9 to 5 in an office, travel all the way? I can do this remotely. They also have dreams that I'll get a golden visa, move to Dubai and just trade in markets. And it's worked. It's worked for quite a few people. Is it time to relook at the dream, looking at what's happening in the markets right now?
See, as they say that when the bull market ends, you face the reality. The one with experience get the money, and one with money get the experience. So one has to be really careful while coming at the top of the bull market and creating a career in equity market. That is not the right time, in my opinion. If you look at from family offices perspective, in last 7 years, there is almost 7-8 times jump in number of family offices in the country, and most of these are not managed by professionals. They are managed by young family members, and they may or may not be having the experience. And as a while ago, Ajay sir was talking about, or Mr. Uday Kotak has also talked about, there is a lot of people, those who are from industry, young people. They do not want to run those companies, and they are opening up family offices. They see that it is easier to make money in the stock market. It's not very easy to make money in the stock market. You require a lot of patience, a lot of behavior control, and you need a lot of experience, which obviously bull market does not give that option.
Okay, so should you exit it, then is the question. Nitin, if I come to you on the core question right away, should you exit it? How do you assess if this is for you or not? Because at the same time, you will be hearing a lot of people saying that ups and downs come. Career investors who have spanned 25, 30 years will say that they have seen lots of ups and downs, and it is at the lowest point that they've really made their money. How do you assess if you are going to be that kind of person or not, or if this career is right for you?
See, if you are able to handle the pressure, if you have the capability to handle the tough time which is currently going on, then the market is for you. Otherwise, you give it to someone who is having the experience, who is able to professionally manage. If your fund size is smaller, then maybe mutual funds would be the right choice. Or maybe if your fund size is large, if you are running family offices, then hire professionals for that. But if you are not able to handle, and if you are working just as the market was progressing or increasing, and you are putting up more money, and when the market is down and there is a fear on the street, there is a bloodbath on the street, and you want to withdraw, then you are not fit for the market, in my opinion. So you need to have very strong mindset when you are in the market.
All right, let's get a career perspective. Niharika Sondhe is with us. Niharika, first of all, talk about whether you have actually seen this trend of young professionals deciding that they don't want to wait for a single-digit increment year after year and want to focus on making some real money and took to the equity markets.
First of all, thank you so much, Tamanna, for getting me here as being a part of the panelists. But yes, there are two perspectives to it. The first is we're talking about students or kids or the younger generation who belong to family businesses. And the second is who are looking at career choices. So if you're looking at the younger generation who's looking at career choices, yes, they are looking at this being an alternative to a 9 to 5 job in a corporate, but there are a lot of factors which influences their decision. And one of them is, yes, of course, making a high return, as you mentioned. But the second is also the kind of portals and promotions which is there in financial literacy. For instance, we have Zerodha, and we have Upstocks and Grow, whose user interface is so easy. Can you hear me?
Yes, ma'am, please carry on.
Yeah. Oh, sorry. So the user interface and the design is so easy that a person who's coming from a non-finance or a non-financial literacy background can think that they can be traders. Then they have these financial influencers, which is then Twitter and YouTube, who kind of promote trading and stock options as well as investment opportunities, and make it into a very lucrative proposal, an alternative to a 9 to 5 job. And these are young minds that we are talking about. And then we have all these other softwares, which is like AI-driven stock strategic software,
Right. So now let's come to the point. So you have seen this as a trend, Niharika. My question is that if someone comes to you and asks you for career advice, how do people get back to their day jobs, so to speak? Or should they dig in and continue right now?
See, when you're talking about doing the day job, yes, for me, the most important thing is to develop your skills, your knowledge, and a strong financial background if you're looking at investment or private equity in the long run. For the short term, I don't think that's the right way for any young generation to develop their career. But for the long run, they need to be very, very well equipped with knowledge before they think about moving forward. And yes, as Mr. Baga said, that this is the market is very volatile and is very cyclical. There will be ups and there will be downs. To be able to manage those that market, you need to have a strong knowledge, and I would say a strong mindset and psychological investment strength to be able to handle the market. So it all depends. If a person is well experienced, has a professional expertise, has good knowledge, it lays the foundation for financial freedom. But yes, it's a good thing to work with organizations, to work with financial institutions, get your expertise, and then think about starting something on your own instead of just jumping and being a part of the herd or the crowd. Yes.
A herd or crowd, people have made a lot of money, and which is why the excitement, I suppose. Mr. Baga, I want to come back to this. Today, if we say, consider someone who is an MBA, has been working in an office, and the employment scenario is also not giving you high-paying jobs. There's a reason why people have moved to this. This was a better alternative. Would we really want to tell them that, no, it's okay, go back and look for those jobs, maybe at a huge cut in what your income is just because it's stable? Is it time to choose stability over what the market gives you, or have faith in the market?
No, you have to have faith in the market. I have lived in this market for 35 years, so I will say you have to have faith in this market. It's gone from 100 Sensex to 80,000 Sensex. So we are a very fortunate generation, Tamanna. My generation is very fortunate because I saw an index go 100x. You don't see that. You see stocks going up 100 times or 1,000 times. A few stocks in your lifetime make your money. Warren Buffett's last year's letter, he talked about 12 decisions over 60 years that really made him his money. If you see, Prashant's analysis when he left HDFC Mutual Fund, it was a score of decisions which helped him make 80,000 crores for investors as the fund manager for HDFC Mutual Fund over 25 years. So, we were very fortunate to enter at a good time. So my experience is wrong. And again, it's at the fag end of a career. So people will say, okay, you've had your life. What are you telling us? But what I have seen with experience is most people don't make money in the markets because it's all the biases that come in. The doctor, psychologist can tell you more about it, but we are afflicted by that. We are not rational human beings. We don't buy low and sell high. We buy high and sell low. So, it is a herd behavior that happens. And unless you have three things, you have the time to study and to manage your own money, you have the training, you are trained for it. The normal MBA or the normal CA or even the CFA doesn't train you to be a portfolio manager. It's an on-the-job training, like a guild. You have to join as a junior to a research analyst, become a research analyst, then be a junior fund manager. Maybe over 20 years, you will start seeing what is happening in the market correctly. It doesn't come straight away. The third thing, so time, training, and temperament. Temperament is very critical. What Nitin was also mentioning, that you have to leave to the professionals. The non-professionals, amateurs are getting butchered in the markets. Again, we have had very good run in India, so everybody thinks they are champions. They are overestimating their skill set. Again and again, I'm saying that. Why do you have a few fund managers who really outperform and who have built multi-generational wealth for investors? That's because it's a very tough job. In fact, Jeff Bezos had asked Warren Buffett in a podcast, he said, Warren, your methods are very clear, books have been written, you put it very simply year after year, every speech. It is so easy to follow you. Why isn't everybody doing what you do and becoming a Warren Buffett? He says, it's simple, but it's not easy because people don't have the discipline. If you have the discipline, if you are a professional, by all means do it. 1 out of 100 will have all that, or maybe 1 out of 1,000. At least in my career, I have not seen too many of them. And we could not promote people to fund management. It's not like a skill set. It is on the job, very hard grind, meeting investors, meeting companies, analyzing a lot of data. Now, of course, with algos and computers, half of the fund managers are being replaced by computers. That's a recipe for disaster. We saw that in '87 with program trading, leading to a big market crash. You will see that because it's the same algos written by similar software guys, which will act in a similar manner.
No, I'll tell you what is concerning, and let me come to Dr. Anjali Chhabria on this. Very unfortunate story that some of you may have seen on the news about a 28-year-old in Nasik who took an extreme step and ended his life because he had 16 lakh rupees in debt in stock market investments. And when I saw that, I'm truly concerned about what people are going through right now. It is a big decision that has been taken by many families to put their eggs in this basket. Dr. Anjali Chhabria, how do you protect yourself? How do you protect yourself? How do you protect your family? Because now it's a question of income. It's not just something on the side.
Absolutely. So I've been hearing this discussion. I think if you have skill sets to start doing some other work, please do it in addition to what you are doing. Okay, you may not get a job immediately. You may have to take a pay cut. And it is very important to be very relaxed and calm-minded if you are dealing with the market. Now, what we need to do as investors, if you think that you're depleting your funds and it's going to affect your next month's, you're going to come down to basics, then it is important to speak to people who are experienced both in the financial markets as well as in, go meet a psychologist, a psychiatrist, and just understand what is happening to you. Because if you are not in the clear mindset, you are going to be impulsive, you are going to get scared, you are going to you're going to get anxious, and you may take wrong decisions. For people around, people who have invested and maybe making a loss, it is very important to pay attention to whether these, whether it is young, old, or middle-aged people, whether they are sleeping well, eating well, and whether they are talking about, feeling scared, feeling anxious, or even, saying that, I don't know what I'm going to do. I think it's better if I die. I do not feel like living any longer. Do not take these remarks lightly, because 7 out of 10 people, before taking an extreme step of dying by suicide share these statements. I think it's important to treat this as an emergency and take hold of them. I mean, if we look at it, 16 lakhs may not be a huge amount to repay in one's life, especially if you're 28 years old or young. But what happens is, what was the mindset of the person? What was the support that he or she gets around when they are sharing this? So I think it's important to pay attention to our young and old people around us, and to understand. The other thing is, what we need to avoid is gambling, because if you analyze gambling is, the first stage is winning, the second stage is losing, and the third stage is just going on gambling till you realize that you are in a big mess.
Yeah, so it could be that pressure, it could be a lot of goals that get pushed back. Not that everyone will take that step. People are wondering what to do. This is a serious discussion. Nitin, I want to come to you on that if you are unsure that you can push through, if you don't have that kind of family backing and support or a corpus built up, is it then maybe a good idea to temporarily at least go back and look for a job that gives you a steady income? Because remember, equity is fulfilling that aspirational dream as well.
Absolutely, you're dot on. So if you're there in the market, see, market is the only way through which you can achieve your retirement goals. However, in short term, if you have setbacks, then take a step back, come out of it, get a job, start earning, have savings, and come back in the market, because you got some experience now built on that. Even if you have some debt, or if you have lost money, you will be able to recover over a period of time. Have patience, have faith in you, develop those skills, develop knowledge, and have very strong behavior control. Do not try to ape others. Do not try to do what others are doing. That is the basic lesson in the market, and it's very difficult to follow.
Just last word from you, Mr. Bhagga. Because big decisions have been made basis the kind of returns we've seen, and just a view on whether you think that more pain will continue in the markets. It's also important to leave people with that point. At its lowest point is when the markets have given the most returns on their way up.
Yeah, but Tamanna, you have seen this as much as me. We have been discussing this for years.
Yeah.
Market bottoms you really can't call, and how long does the market stay down? The longest in the last 40 years has been about 850 days. The shortest would have been maybe 18 months or less than 12 months. So on average, the bear market in India lasts about 12 months. The bull market lasts about 44 to 54 months. So that's why the markets always go up in the long term, because your bull markets are longer and their amplitude is much longer than the bear market. But what if this time, given how precariously the US valuations are sitting, and given US is 70% of global market cap, and out of which 40% is artificial intelligence led the Magnificent Seven. What if there is a big crash like 2000 or 2008 and stocks go down 50%? Or if somebody is having a leverage position in the futures and options, so their capital gets wiped out, plus they have to bring in more money. They have to borrow money from friends, relatives, parents. Then what happens? So it is, the regulator can do only that much. The regulator can't stand by you. And we can't predict how long the pain will be, how deep the pain will be. So I would say listen to experience in that sense. Even if you want to start this off, then take 10% of your funds and start off with that. First year, be very disciplined that I will trade or I'll invest 10%. 90% you keep fixed income. If you make a success of it, you keep on working on it. Don't put in 100% of your money on an untried, because the odds are against you. When 95, 99% of the people lose money in the short term, the odds are against you. You have the biggest institutions with massive computing power, with great risk management, great professionals who are sitting trading against you. What chance do you have? That is the whole trouble. Right now, I see Tamanna, small SMEs. They pull out money and they say, I have started trading. I'm doing very well. I was making only 25% return on my business, and this is giving me a kick. What Dr. Anjali also mentioned. So it's becoming gamification. It's becoming a video game, and the younger the people are. I've had some unfortunate cases of friends' children who did harm to themselves. They saw it as a video game and they said, I'm resetting my life. I'm not happy with this life. I'm going to press the reset button. And they jumped off a 30th floor. So that is happening a lot. And in that sense, to leave them alone on this investment world, I think that won't be fair to them.
You know, important words. A lot of support is required right now because, you know, when we cover market movement up and down every day, we cover it from the point of view of what we see on the screen. But this aspect of the coverage is also very important. They're real humans on the other side of it with real money, with real hopes, dreams and aspirations, and their needs need to be addressed as well. We hope we have done that to some extent. Thank you so much to all of you for joining us on the show today as we wrap up this episode of The Big Question. Tell us what your view is on the topic and what you'd like to see next. We'll be back here, same time, same place tomorrow.